Nigeria, by extension Africa, battles a growing youthful population and with little or no meaningful engagement leaves a ticking time bomb on our hands. We are a blessed continent with great wealth, both in people and material. Our focus on ways remains driving conversations that affects us all. Topics in the news, social concerns, politics, leadership, governance, empowerment, resource management, conflict management, finance, SME sustainability, technological innovation, food security, health, education, brain drain, our well-being, citizenship, and much more. Our goal is to continuously drive these conversations, keep them burning at the table to effect a positive change, both for our nation and continent. Ways, what are you saying, has a secret ingredient that completes the conversation every single episode, and that ingredient is you. Our past conversations shaped our yesterday. To shape our tomorrow, we must keep talking. So, I want to hear you. Be a part of our live conversations Mondays through Fridays. And let's all have our say.
From harassment calls to at midnight and to the public shaming of borrowers on WhatsApp groups, Nigeria's loan apps have turned quick credit into a nightmare for many. But the Federal Competition and Consumer Protection Commission, the FCCPC, have said enough is enough. And with new regulations under the Dion framework, lenders must now register, disclose their terms, and respect consumer privacy, or face fines of up to 100 million naira and sanctions on their directors. On the show tonight, we're going to unpack what this crackdown means for everyday Nigerians, the loan sharks, and the future of digital lending in our economy. It's another episode on your favorite primetime show, Ways. My name is Chioma Kalu. Tonight, our conversation centers on ending harassment in digital lending, what the new FCCPC rule means. Remember, Ways is all about you, as you are the why in Ways, so be a part of our conversation every single day and add your voice to the discussions. Head on now to YouTube, our YouTube channel at Official Upgrade TV. Hit that subscribe button, like, share, and invite your family and friends to join the show now. Now, when I open the phone lines, I would really want to get your insight, your perspectives on this particular topic. And as always, like we do every day, here is a quote for you to ponder on today. It says, innovation is welcome, but not at the expense of consumer rights and dignity. And this was said by Tunji Bello, the FCCPC CEO. Now, we're going to go into this much later, but first I'm going to go on a break, and when I come back, I'll take you through my news interests for the day. Don't go anywhere. Welcome back. You're still watching Ways. Now, just to take you through the stories that caught my attention today, the first one I have is Dangote denies ownership of truck in fatal accident in Enugu State. Now, Dangote Industries Limited has denied ownership of the truck involved in a fatal accident in Enugu, distancing itself from reports linking the vehicle to its fleet. The crash on Wednesday morning involved a haul truck loaded with cement and a Toyota Corolla. The vehicle traveling from Aba to Abuja bore markings associated with Dangote but was registered to another company, Visco Investment Global Limited. In a statement, Dangote Group said the truck was operated by a third party, not part of its fleet. Now, they said, we are engaging with the appropriate agencies to find out why the truck was carrying our logo when it is not part of our fleet. It added that it would introduce stricter checks on the unauthorized use of brand identity. Going forward, they said, we will apply more scrutiny to the misuse of our logo on vehicles not linked to the group. Now, the company explained that it typically avoids commenting on individual cases, but was compelled to respond due to misinformation spreading on social media. It also pledged cooperation with authorities investigating the crash. Now, if you've been following the news, Dangote group of companies have been making headlines. And the most recent one is the accident that, cost the life of the sister to one of Nigeria's celebrity, Fina. Right? And there's been a lot of backlash. A lot of people are calling Dangote out, saying this is not even the first time that the truck is involved. Bringing up the questions of how their recruitment process goes, because it was even discovered that the driver of that truck in that particular incident didn't have a driver's license. So it begs the question, how was he recruited then? I understand that, of course, Aliko Dangote is not, as the head of that group, is not expected to, be involved in all of this, because that's why there are people put in charge for this. But, I mean, it's his company, and I think a lot has to be done with regards to these frequent accidents. But then again, they are denying. They said this particular Enugu accident, it has nothing to do with us, meaning, they're suggesting now that some trucks actually just brand themselves Dangote, just maybe for recognition, maybe for, I don't know. But now they're claiming this is not our truck. How does he have our branding? And they said, oh, we're going to do a lot of scrutiny to find out how this is able to happen. And also, yes, they've pledged cooperation with authorities to investigate this crash. And like they said, they rarely come out to, talk about all of these things. But I like that they actually came out to speak, because there's a lot of misinformation that spreads on social media, right? And it is just okay to get their own side of the story. So we're just going to follow up on this story and see what the outcome becomes in the coming days. Now, the second story that caught my attention, it says death toll in Niger State boats mishap rises to 60. This is about this afternoon. I don't know. I hope it hasn't increased. Now, the story has it that at least 60 people have died in a boat mishap in Borgu, LGA of Niger State. Now, Abdullah Ara, the Director General of the Niger State Emergency Management Agency, said the boat was conveying about 90 passengers when it capsized on Tuesday at about 11:30 a.m. at Gusawa in Malale Ward. Now, the vessel departed from the Tungan Sule in Malale on Tuesday morning and was reportedly headed to Duga for a condolence visit when it struck a submerged tree stumped near Gusawa community. Now, the NSEMA DG noted that the accident was caused by overloading. The incident adds to a string of fatal boat accidents in the states, marking the second major mishap on its waterways since July. Now, between September 2024 and July 2025, no fewer than 90 people have lost their lives in similar mishaps across Shiroro, Mokwa, Kacha, and Lapai local government areas. This is really sad. I don't know. I really don't know what we can do to, avoid these things. So if you're not suffering as a result of maybe overloading or bad use of the road, it's a case of, people trying to flee banditry in their communities, and then seeking refuge in the water. Like I said the last time I was on the show, most people want to jump on the next available boats, canoe, whatever. In the bid to, save their lives, they just go and meet their death in the waterways. And it's really sad. I really hope something is done, because it's not a joke anymore. It's not. We can't be recording this number of deaths every day in this nation. Just look at the stats from September 2024 to July 2025. No fewer than 90 people dying. It's not a joke. These are not commodities. These are human lives. Anyway, on the last story of interest I have today, I don't know why this story, I don't know if I'm angry, if I'm happy. It says Tinubu departs Abuja for 10-day working vacation in Europe. Our President Bola Ahmed Tinubu, has departed Abuja to commence a 10-day working vacation in Europe. the State House has announced. Now, in a statement issued by his Special Advisor on Information and Strategy, Bayo Ononuga, said the president will spend the period between France and the United Kingdom before returning to the country. The trip forms part of his 2025 annual leave, and the departure comes on the back of a busy schedule for the Nigerian leader, marked by key economic reforms, new policy directives, and diplomatic outreach. Only this week, Tinubu highlighted unprecedented growth in non-oil revenues that has powered Nigeria's strongest fiscal performance in recent history. Tinubu's latest trip, although designated as a vacation, is expected to combine rest with working engagements in Europe, continuing a pattern of using foreign visits to consolidate domestic reforms and attract international support. If I'm not mistaken, I think this is the 41st, pardon me, 41st trip the president is making. Well, excuse me, make with that whatever you want. Anyway, that's all the news I have today that caught my eye. I'm going to go on a short break, and when I come back, we'll dive into our topic for tonight. Don't go anywhere.
Tell us you're a Nigerian without saying a word. Energy security is one of the most pressing issues for many developing countries like Nigeria. And if there's going to be any meaningful progress, addressing our energy issues is non-negotiable.
I need to see light for my house. Make them do something.
Band A is expensive. I literally have to turn off all my appliances just to reduce costs.
We need light.
Introducing the Energy Outlook, your go-to show for everything energy. Every week, we'll bring you the latest insights, innovation, and in-depth analysis of Nigeria's energy sector. From policy discussions to regulatory insights, we'll analyze the key decisions influencing growth and sustainability in the energy sector. We'll bring you the human stories behind the headlines, giving you a personal perspective on the broader energy challenges. Join me every Friday at 6 p.m. for the Energy Outlook, your guide to the future of energy, where energy means business.
Thank you for staying tuned. And if you just joined us, tonight's discussion, we're talking about ending harassment in digital lending, what the new FCCPC rules mean. Now, please let's hear what you have to say. Remember, you can join the conversation by sending an SMS or WhatsApp message to 08180384663. And also, my phone lines are open now. You can call on 070250077749. and on 07014242420. Let's hear what you have to say. Now, the story of loan apps in Nigeria is one of two sides. On one hand, they offer quick credit to millions, shut out of its traditional banking. And on the other hand, they've been accused of harassment, privacy breaches, and outright humiliation of borrowers. Now, the FCCPC says it's drawing a line, right, with strict new rules, mandatory registration and sanctions running into 100 million naira for violators. But what does this mean for consumers desperate for emergency funds and for fintech ecosystem now that has thrived on easy access, right? To help us break it all down, I'm now joined by my guests. I have two guests, but first of all, I'll be introducing Stella Anele. She's a cybersecurity advocate, and Lara Randall would join us. She's the director, technology account management of MasterCard. Stella, thank you so much for joining me on the show.
Thank you very much for having me.
Great. I understand you're a cybersecurity expert, and I'm so glad you're here because there's a lot of things that happen on the cyberspace, you know, and it's quite sad because sometimes consumers don't seem to have that level of privacy anymore, especially when it comes to digital lending. So many loan apps now have been accused of, scrapping the borrower's contact list. From a cybersecurity point, right? How dangerous do you think this is?
It's very dangerous from a cybersecurity point because, first of all, you're violating the person's privacy. That's data privacy violation. And second of all, you are harassing the person. That is harassment. So many Nigerians have lost their jobs and good relationships because of this.
Okay. So these new FCCPC rules now, do you think they will go far enough to protecting the Nigeria's digital data, especially, you know, from the abuse of these lenders? Because, I mean, a lot of them run to these lenders in desperate times, right? So I beg to even say that a lot of them don't even go through the terms and conditions. You know how when you're looking at something, you want to get it done fast. For instance, let's say you're opening a Facebook account for, you know, for the first time, and you're new. We don't have Nigerians. Most Nigerians don't have patience, right, to read through terms and conditions. And I have come to realize that most of these people hide some of these details in between. But because Nigerians are, well, a quick fix thing, we need it sharp, sharp. You know, we just click continue. You know, we click accept. So with this, how far do you think this this FCCPC rule would be able to shield Nigerians now from this loan sharks?
Okay, with the rules, they have already, you stated it earlier, they have already imposed a fine of about 100 million, and that's not a small money, right? And then I think it's not just stopping there, it's also 1%. You either pay 100 million or 1% of your annual revenue. That is, if that 1% is higher than 100 million. So that's a lot of money. They also went further to, you know, put a rule that if these lenders do not register with the FCCPC, then they would have to, you know, suspend their directors for at least 5 years or so. So, and then maybe blacklisted. So if an organization or a fintech is blacklisted, I don't think any fintech would love to be blacklisted. I don't think any director would love to be suspended. So that actually is actually a very good route to actually curb this particular problem.
To come to you, Miss Randall. I understand you're here with us now. Great. Thank you for joining us. Please confirm you can hear me.
Yes, I can hear you.
Beautiful. So I want to find out, right? The FCCPC now requires all loan apps to register and comply within 90 days, right? How will this, reshape the fintech space? Do you think it will slow down innovation? What do you think?
No, I really do not think that it is going to slow down innovation. Relatively, up to an extent, look, innovation and regulation work hand in hand. They must work together. They have firms around the world, I mean, have a legal arm or an arm that manages policy and regulations, and it just means that they have a bit more work to do so that they are recognized properly. But it's not going to stop innovation in any way, no. I don't see that happening.
Okay, beautiful. Now, for, startup fintechs, right, who, I don't know, might not have gone through the right processes, and then with this 100 million sanctions, do you think it's going to force them out of business at some point?
When we say 100 million naira, I think that we should, 100 million is relative. Look, 100 million is relative. So if I was making a revenue of 50 million naira, then yes, 100 million naira is a lot of money. But if I'm making a revenue of 100 billion, 100 million naira is a small chunk of what it is that I am earning, right? So when we look at 100 million as a sanction, I think that we have to hold it relative to say is depending on the size of the business and how much it is that they earn, are they able to, how significantly will it, shake them to adhere to rules and restrictions?
Back to you, Ms. Anele, right? Beyond the FCCPC, right? What role should Nigeria's Data Protection Commission, that's the NCC now, or the NCC rather, what role should they play, right, in policing these loan apps? Because sometimes I want to feel like there's no regulation. I mean, you see people complaining that there are obituary posters of their faces. It's funny, but it's not, right? And then before you say Jack, their families, poor families are saying, and that can lead to a lot of things that we can't even count, right? So now, what can the NCC or the, Nigeria's Data Protection Commission, what can they do in policing these loan apps going forward?
Okay, first of all, it's so bad.
It is. I agree.
To see it is a very bad thing. I mean, culturally and otherwise, it's a very bad thing. So basically, the FCCPC is basically for consumer protection, right? So the NCC, the Data Protection Commission, their own area of control is data protection. So basically, the Data Protection Act, we have NDDPR that protects the data of Nigerians. So they should work hand in hand, maybe with app stores, Apple, Google, and telecommunication companies, to make sure that these loan companies are complying to these rules. And I mean, if you're downloading something from Google app, you know that you have some kind of trust that these people are legit. So if they are not complying, if the Google people, the app.
Can you hear me? Okay, I think I lost her at some point. Now, coming back to you, Ms. Randall. So now, do you think this regulation is going to boost consumer confidence? Do you think it's going to attract more investment to this loan app and in turn also, attract more consumers to, take advantage of whatever the loan apps are offering?
So that it's a wait and see game, right? How well the regulations are enforced is what's really going to determine whether it's going to boost that confidence or not. It's one thing for a regulation to be out there, but it's another thing for it to be enforced and enforced properly, enforced strongly, so that people can adhere to it. So it really is a wait and see game at this point, to be honest.
I'm glad you said that because, Nigeria has strong laws on paper, but enforcement is often the challenge, right? So I was also going to ask you, right, what makes you think, do you have a feeling somehow that this regulation is actually going to be different? Well, for me personally, I think the FCCPC has made a name for itself to some extent, right? But do you think with regards to this particular situation, do you believe that implementation is not going to be a problem?
So I think that yes. Interestingly, I was on one of the popular social media apps earlier today, and I was going through this. I was going through the announcement, the regulation, and just trying to read through what people have been saying about it. And so I stumbled on the social media page of the FCCPC, and you could see them, sharing feedback from people on other issues outside of digital lending, and people sharing feedback about how reporting formally to the FCCPC has helped them to resolve a certain issue. So yes, they have built that name for themselves. They have that reputation on the streets as an enforcer. It really would be interesting to see how things will turn out. I know that there are a few things that they are doing. For example, I know that in time past, there have been instances where we have apps that were not legal, or they had violated a regulation or the other within the ecosystem. And so what they had done was to work with the Play stores to have those apps taken off. So I think that things like that would definitely be helpful to improve the dynamics in the ecosystem and get things better. Registration requirements, if they're adhering strictly to the companies, providing the right information about their operations, 90 days from now, or was it from yesterday? How well do we see that they are going to enforce or sanction those that have not registered? Are they going to work with the Play stores to take them out? How are they monitoring suspicion loan apps, people that are on watch lists? How are they working with other bodies, privacy commissions? How well are they working hand in hand would really help to filter down the results that the public will see.
All right.
I also saw that in the publication, they had put something out, there's an email address to reach out to as well if you don't find that you're getting answers, or you find that there's a violation taking place. Putting that email out in the public has definitely been helpful as well, because it makes sure that the man on the street knows who to reach out to for support. And it really is a step in the right direction. How well it will be enforced is what we will have to wait and see.
Okay. Well, like I said earlier, at the FCCPC, I've been following them for a few years, and they've been doing a great job, honestly, in customer feedbacks, in customer relations. And when you see the feedbacks, you're encouraged to reach out. And yes, they always have a phone number or an email address they put out. And I'm glad that you both are mentioning Google Play and Apple. So I'm coming back to you, Mr. Nele. Are you back with us?
Yes.
Oh, beautiful. Thank you. So you were speaking earlier, and you also mentioned Google Play and Apple. Now, my question is, do you think app stores, right, like these two, should be held accountable for hosting predatory lending apps, like, those fake ones, if I have to call them that?
Yes. I think they should be held accountable for hosting rogue players. This issue of having rogue players is not just unique to us Nigerians. It's been a global issue, and they have done it in countries like India, Kenya. So Nigeria should not be different. So they are playing on our grounds. They should also play by our rules. So yes, I think they should be held accountable. And basically, their standards, their policies, everything they have ever stand for says that they do not use rogue players, they do not host rogue apps. So if we have anything contrary to what they promised, then they should be held accountable.
I like what you said. They're playing on our grounds and should play by our own rules. Ms. Randall, what do you have to say? Should they be held accountable for hosting predatory lending apps?
So I struggle slightly with them, being held accountable. I think that what's important is that the the app should be properly labeled, so that it clearly sees what it is that it does. An organization is not bigger than the country in which it operates, right? So in the event that the app is violating a law in the land, then I would say that the Play Store or whatever app store it is will then work closely with the government or the commissions within that country to make sure that if they need to be taken off, they are taken off as quickly as possible once the government or the commission has notified the app store, right? But I'm not very certain that it's the onus is on the app store to take them out, actually.
Okay.
Once they have been properly labeled and they're not violating any laws in the land, no.
Okay, so still on that now. So loan apps have thrived, because many Nigerians are excluded from traditional banking. Now, do you think these rules, right, risk shutting out the very people the fintech was meant to serve? Ms. Randall.
I like that one. I like that one. So look, I don't think so. I really don't think so. When we want to look at this we should do a couple of things, please. I mean, we've always had traditional banks, right? We've always had traditional banks and We've always had traditional banks, and then the loan apps came into play. Why did they there was a market for them? There was a market for them because the traditional banks were not serving people that the digital banks or the digital lenders serve, or it was taking a longer time to serve those people. Whether it was things like documentation, the kind of paperwork, the guarantees that the banks want, the securities that they want for the loans. There were barriers to entry, into getting loans in traditional banks that caused there to be a market for the digital lenders at the underlying until those underlying issues are resolved. The digital banks will continue to have a market for themselves. Today, when you want to get a loan with essentially your phone number, you can get a loan. So it's really things like regulations, what regulations are in play, how effective the regulation is upheld is what is going to help to manage the terrible effects of having the unsavory digital lenders in the market space. I think that something else that may also be helpful as well is to peg the spread that the digital lenders could borrow. You hear sometimes that the interest rates are ridiculous, sometimes, very frankly, the interest rates are ridiculous. So I think that if there were a cap around how much spread between the MPR and the interest rates that they can offer to the public, I think that it would help to improve competition across that industry and just make things better overall in the digital lending ecosystem.
All right, thank you so much. Please, both of you, stay with us. We're going to go on a short break, and then when we come back, we'll continue. Don't go anywhere.
Life is made up of moments, some that fill us with joy, others that test our strength. Welcome to Heartlights. This is our space to explore the highs and lows of human connection, the love, the heartbreak, and resilience that shapes our life. From relationships to friendships, parenting to partnerships, and so much more. Every week, we share stories and conversations that define us, navigating love, separations, the struggles of parenting, dealing with anxiety and managing the pressures and stress of life. Real conversations that bring us closer, helping us heal, grow, and connect. So join me Mondays through Fridays at 10 p.m. for Heartlines, the show where we connect hearts, have real conversations with real people, one story at a time.
Welcome back. We are still talking about digital lending and what the new FCCPC rule means for consumers. And I'm having this conversation with two beautiful ladies, Lara Randall, the director of Technology Account Management, MasterCard, and also Stella Anele, a cybersecurity advocate. Thank you, ladies, for still staying with me. Please confirm you can still hear me. You can,
Sure,
yeah?
yeah.
Oh, beautiful, beautiful. So I'm going to come to you, Miss Anele. So we talked about this this habit we have of not reading rules before clicking accept, right? For most of these, for most Nigerians. Now, how much risk? We've talked about it, right? But this, what can be done? We know the risks, right? What can be done now to ensure that they read these risks? They see what they're getting into.
Okay, I think the problem or the reason why most people don't read terms and conditions is because they write it in a way that is not easily understandable to a layman.
And you
That's the
don't have
biggest
time for a
challenge.
lawyer to come and break it down for you.
So I also think while reading through the NDPR, there are stipulated laws that states that terms and conditions should be written in clear and plain terms that everyone can understand. So personally, I usually suggest for people around me, of course there is AI. If you don't understand anything you're reading, just copy it and paste and ask AI to break it down for you before you accept it. And mostly, Nigerians are quite intelligent. So I feel like most Nigerians will be able to actually understand some terms and conditions, but it's just the patience. So the responsibility does not just fall on the government agencies. It's also our own part. We should play the part. We should calm down, read it. I know that sometimes we might be distressed, or I mean, when you want to borrow loan, you're probably in trouble. Most times, you want to borrow quick loan, you're in trouble. You want to get out of it, but sometimes you end up putting yourself in more trouble than you can ever imagine.
That's right.
You know, you don't know interest rate. You don't know how it is calculated. You don't know. Before you know it, you just borrow 100,000, and in 1 month you're owing 1 million, and your salary is not even up to 100,000. Yeah, it's funny. So you have to really, really calm down and read that. Find ways to break it down. If you can afford a lawyer, good for you. But if you're borrowing, it means you don't have at that moment.
Exactly.
Use the free AI. Let it translate for you. Understand what you're signing up for. And honestly, even the FCCPC rule it has been stated, if there is something, any part of the terms and condition that actually violates the act or the rule that they just established, you should report it. So if you're using any loan app and the loan app is making you to sign into something that you know that is illegal, the first thing you need to do is to report them to FCCPC, and then they will take it up from there.
All right. I mean, in everything we're saying, we've established that most of the borrowers do that based off on desperation, right? That's why most of them don't even have time to, scan through anything. They don't even have time to read, talk more of involving FCCPC. Do you understand? Now, speaking of desperation now, Ms. Randall, how do you respond to borrowers who say, the fintech prey on desperation rather than solving financial, exclusions?
That's an interesting one. There's a market because there's a need. There's a market because there's a need. There are people who desperately need money, and that's why we have the proliferation of digital lenders that we have today. Terms and conditions are enforceable. It's not just text that you have to sort of like read, scan through, and agree to so that you can get what it is that you want. And I think I just remember there was a lady who went to, if I remember that story very well, there was this lady who went to Disney and she got injured in Disney, right? And I think she wanted to sue. I don't remember the story very well right now, but I think she wanted to sue. And then because she had subscribed to Disney, the app, she couldn't sue them because she had gone to Disney World, right? Because of a term that was in subscribing to the Disney app, it kept her from being able to sue them when I think she got injured at Disney World, right? So terms and conditions are enforceable. There's a market for people. People at the end of the day, even these fintechs, rogue that they are sometimes, they go into the business because they're not a charity organization, they're not an NGO, they're out there to make money, right? The onus is on the individual to make sure that they're going into bed with the best possible partner that they can go into bed with. So they should not. You have to, sort of like take the terms and conditions, read them, try to go through 1, 2, 3 people before you sign blood. Before you sign blood, they wait to at least one party. So yes, some rogue organizations would possibly prey on desperation, but then the onus is on you to be certain of what it is that you're going into, so you're not stuck after you have gone into bed with them. And it's so easy. It's so easy to take a loan today or take a loan yesterday, and by today, interest rates have gone up.
Oh my God.
Black tax has come into play. Your expenses are not adding up. And so even if you had gone into the loan at the beginning, knowing that by the second month you can clear out that loan, sometimes life just happens such that you're not able to meet your obligations as at when due. So there's just sort of there's desperation, yes, but sometimes give room for a little extra that could happen in life that would not allow you meet your financial obligations. And then if that happens, are you still good? Are you able to cover yourself, right? It's very important to do so. Don't just it's desperation, but try not to go into bed without checking what you are doing very well.
I hear you, because in fact, I dare say that most Nigerians, they just take this loan without even looking at the interest rate involved. And just like Stella said, you now end up seeing that you're borrowing 100,000 and you're paying back ₦1 million. Now you even start realizing when you have spent that money, and they start sending you notifications that, oh, your debt is due. That's when you now want to go back and check, and when did I take up to ₦1 million, right? So still speaking on that, because I mean, like you said, life is not predictable most times, yeah? So how can, still on you, Ms. Randall, how can fintechs, provide affordable loans without crossing into these exploitative practices, really? Do you think it's even possible? I understand they're not charity organization, but can't we do business without thinking of ways to exploit people?
I'll go back to the comment I made earlier about the spread. That comment I made about the spread. So you look at it this way to say, MPR or the interest rate is this. And if there is a spread of this range on loans for private organizations, they would make money. And I think at the end of the day, sometimes some of these businesses, it's a game of volumes. Are you giving 5 loans or are you giving 500 loans? If you are giving 5 high interest loans versus 500 low interest loans, at the end of the day, do you break even? You're very likely to. And this, at the end of the day, right, we talked about barriers to entry earlier. A lot of the people that want those loans are individuals as well. So yes, I think that it is very possible for the fintechs to be honorable, to be decent, to charge fair interest rates and still make very good returns at the end of the day.
All right, Stella. Now we have agreed also. I've agreed that sometimes, yes, a lot of people don't even think, and they, especially, I mean, we all use smartphones, right? You're watching something on YouTube and it pops up. OPay pops up, Okash pops up, this one pops up, and you know, the more frequent they pop up, the more money you see that they can offer you, and oh, it looks juicy, right? And then at that point, you're not thinking about how to pay back, you're thinking about how to get from them. Now, how can consumers verify which loan app is safe and, you know, compliant before giving out sensitive information? You know,
Okay,
in this whole battle of, I mean, there are a lot of them, right? So how can you sieve them and pick out the ones that are safer?
Okay, that's a very tricky question since I've not actually have first-hand experience in borrowing from this loan app.
Okay.
Yeah, but I'm going to be saying from what FCCPC has actually asked us to do. First off, you have to check if they are registered with the right organizations, right? Not just CBN, but check if this FCCPC rule that is protecting you as a consumer is also part of what they are complying with, because that's very, very important for you. You want to make sure that that is like very important. I think the FCCP, the reason why they are asking these fintech industries to register so they can actually have a compiled list of registry, just like CAC. You can always go there, check for people's business if it actually exists. So I think that platform, I don't know if they have actually created such thing, but if they have not, they should take it as my suggestion to do that. Well, that would be a very nice way to check if this loan app I'm about to borrow is in compliance with these people's rule, is in compliance with this rule that protects me. And then if it is in compliance with this rule and every other authority they are supposed to comply with, I think it's safe to go ahead to just read the terms and conditions, know the interest rates, and then maybe check within yourself if you actually wanted to borrow that loan or if you're actually going to go ahead not to borrow the loan.
Okay. Coming to you, Ms. Randall, right? Beyond lending, what other fintech innovations do you think Nigeria should focus on, you know, to diversify the sector?
Take the question again, please.
What other fintech innovations beyond lending, right, do you think Nigeria should diversify into, you know, move into to, you know, spread their wings in the sector?
One of the ones that easily come to mind will be agric technology.
Okay.
You see, you may have seen this before now, where they say invest in a farm and you'll get certain returns back at the end of the day. And a few months down the line, some of those people run away with your money. Yeah, so I think that's one sector to look at very strongly, and then just make sure that when people are offering investment options, and then maybe just investment houses altogether, you see people today offering as a form of lending as well, you see them, people, organizations selling commercial papers. And before, commercial papers used to be something that only banks offered or the very large organizations offered to the public. But now you see a lot more organizations offering commercial papers to the public for sale. You see a lot of people go out there to say, look, invest in a farm, invest in a corn farm, invest in a goat farm, and you'll get some returns at the end of the day. So I think that just looking at the investment space and protecting people a bit more would be a very welcome development. Again, it's not about killing innovation, but just making certain that the funds of investors had earned money is safe, and that people have dignity, a very bad sport because they have chosen to trust a firm that they have seen and believe in.
Okay, so now looking forward, right? How can Nigeria ensure that, protecting consumers will not now stifle fintech innovations? How can we ensure that? Because I know, yes, you want to protect your people, but how can we do it in a way that is so right so that it will not now stifle this fintech innovations?
I think collaboration is quite important.
Okay.
Even this digital learning that we have started with, as the basis of our conversation this evening, digital lending came into play. And when it came into play, it was very good. It was very helpful. You didn't have to sign 20 forms, bring your grandmother's head as evidence that you were worthy to get a loan, right? For a small amount of money, you could, based on maybe your transaction history, you could get a loan. So there's been very good there's very good potential there. But I think that maybe collaboration will be very helpful across industries. So whether it's with the FCCPC or any other data privacy, communications, across sectors, whatever it is that the sector is, that collaboration between regulator and the industry would be very helpful. Now, because there's so many vast industries, around the world, or even let's just keep the conversation in Nigeria. There's agriculture, there's manufacturing, there's food, there's skincare. There's a very wide base of industries. The regulators would not necessarily, even stable coins, Bitcoin, right? The crypto world. There's a very wide base that people can play in today. The regulators would not necessarily know everything that they wish to know about every sector. So that collaboration where people who sit in crypto, who sit in agri-technology, who sit in investments and manufacturing, whatever space, right? If they have regular engagement with regulators, I think that it would help to foster a healthy sense of partnership. You maybe sometimes fear what you do not know. Yeah. If the regulators understood the industries better, potentially, there would be more space to play. And when they are putting regulations out there, the regulations would not restrict innovation because they understand properly what they are putting out there. So yes, sometimes it could be like the regulators are coming hard on you, but when you do that obvious work to partner with them, engage with them, teach them, it would help in the information that's going out and how they communicate within themselves, and then what they would in turn make available to the public as a framework to be followed.
All right, thank you. Last words, Stella. What would you, if you could, right, advise a Nigerian borrower in one sentence and in 1 minute about protecting their digital footprints? What would that be? What would that advice be?
I think I've been giving so many advices, right? Apart from reading the terms and conditions, if you find yourself in a situation where, I mean, they have already harassed you, you just have to be calm, make screenshots, take recordings, just have your evidence, then forward it to the FCCPC. One thing we tend to do is always going online first to rant. Sometimes you say things that that probably will put you in trouble if you don't know the law. So if you know you do not know the law or how to defend yourself out there online, just allow the regulators to do their job. Just report them, keep the records, and report them to the FCCPC. FCCPC. They have hotlines and they have their websites available for the public. So that's my advice.
All right. Thank you so much, ladies, for joining me tonight. It's been such a robust conversation, and I hope to invite you very soon for another conversation. Thank you so much.
Thank you for having me.
Yeah.
Thank you.
All right. For many Nigerians now, the loan apps, have been both a lifeline and a nightmare, honestly. They promise quick relief but delivered harassment, defamation, and even fear. Now, with the FCCPC's new rules, the tide may be turning, but regulation is not, is not as strong if it's not enforced. So the real test will be whether consumers feel protected and whether digital lenders can innovate without preying on desperation. And in the end, dignity must remain the non-negotiable price of doing business in Nigeria's digital economy. So when you're borrowing, make sure you read through your terms and conditions. I know sometimes it's a cause of depression or distress, rather. You're desperate to get the immediate cash, but do your due diligence so you don't fall prey of these loan sharks. Thank you so much for joining our conversation tonight. And just before I go, do ensure you subscribe to our YouTube channel at Official Upgrade TV. You can interact with us further, drop a comment, and most importantly, follow on all our social media engagements. And remember to like, share, comment, and invite your friends and family to watch us and follow us. If you missed my quote earlier, here it is. Innovation is welcome, but not at the expense of consumer rights and dignity. And that was said by FCCPC CEO Tunji Bello. Till I see you tomorrow, do enjoy the rest of your evening. Bye-bye.